Good afternoon, everyone, and thank you for joining our H2 2024 Fraud Trends call. Now, with March being Fraud Prevention Month, I'm excited to have an expert joining our discussion. Jeff Horncastle, who's the Client Communications and Outreach Officer for the Canadian Anti-Fraud Centre, is joining us to share his insights on fraud, as well as talk to us a little bit about what the Canadian Anti-Fraud Centre is seeing. Also joining me is Julie Kuzmic, our Senior Compliance and Consumer Advocacy Officer, to discuss consumers' perspectives on fraud. Now, just before we get started, I'm going to pass it over to our producer, Jordan, to go over a few housekeeping items for you. Jordan, over to you.
Thank you so much, Cheryl, and good afternoon, everybody. Thanks so much for joining us today. Each area within the On24 webinar platform is responsive so that you can maximize or minimize each widget or box on your screen based on your viewing needs. There is an Ask a Question widget underneath the media player, so feel free to enter any questions you may have, and we'll try to address them throughout the session today. In the event that there are too many questions to get through, we will reach out to you individually to follow up in the coming weeks. Today's presentation in English and French is available for download in the related content area. The session is being recorded, and you will receive the on-demand link via email tomorrow. To the right of your page, you'll see a sign-up link for our Market Pulse Business Trends event on the 27th. Lots of really great information will be shared with guests from the Business Development Bank of Canada and Export Development Canada, so do not miss out. Some additional features you'll notice on the bottom of your screen are reactions. I've already seen some coming in. Perfect. Keep letting us know how we're doing. Our survey and contact us. Feel free to check any of these out and provide your feedback. We really appreciate it. And with that, that's all from me. Let's get it started. Cheryl, back to you.
Thank you, Jordan. Okay, we are going to dive right in, but we're going to start with some of the economic indicators we observed. So here you can take a look at the GDP numbers, and you can see sort of the top line figures indicating some continued growth in Q2. But what we saw was the growth not really keeping pace with the expanding population. And really this led to a decline in the per capita GDP falling in Q2. Now, overall, I would say we saw the economy showing some growth. However, there were some concerns around the GDP per capita figures until about the end of Q4 2024. And some of the factors that really had a role in this real upturn was more around the consumer household spending, some of what we saw in terms of residential and business investments, but also a slowdown in the population growth was having an impact. Now, looking at population and employment, we see that strong growth in the labor market didn't really keep pace with the population growth until more recently. And you can see that the average percentage of the population that is credit active has been increasing. So what are we seeing in this shift? Looks like the labor market growth is catching up to population numbers. But when we look at employment and the employment ratio to the right, you see employment increasing, but against the ratio, you actually see a bit of a decline. So again, certainly we're seeing some impacts, and where things are going to continue to grow and how this has an impact on fraud, we're going to continue to see. Now, if we touch on inflation for a moment, we have seen that we're holding steady with the Bank of Canada's target rate at 2%. And that really started to pave the way last year for lower and lower interest rates. We just saw lower rates March 12th. So again, good news. However, with this positive outlook, there's the potential for disruption with US tariffs. And we know that that could certainly have a negative impact on GDP growth. And just cause increasing pressure on consumers, potential job losses. Now, if you look at the right, you'll just see some of the factors, the downward and upward drivers of inflation that we saw. So we've seen the GST break that we had still having an impact. And we saw that with food and restaurants, alcohol, beverages, toys, games. And some of the upward drivers that we saw having an impact on inflation were around the energy costs for consumers. We certainly have seen that increase, as well as vehicles. The auto space has certainly had some higher prices, and so that has certainly had an impact as well. So let's take a look at the fraud trends. Now, here you're going to see that application fraud rates have decreased, especially when we compare them to the high levels we saw in 2023. Now, the fraud rate did drop significantly at 47.1% from Q4 2023, reaching the lowest point since 2022. Now, if we touch on small business application fraud, you will see a slight increase of about 2.2% year over year. And I would say this is something to watch for. We do see with small business application fraud that it can be undetected, especially if focus is not put on that specific portfolio. Now, the chart on the right, you will see it depicting first and third party fraud. Now, first-party fraud describing incidents where the borrower is knowingly using their name and their credentials to commit the fraud, whereas third-party fraud indicates someone other than the owner of the credentials or the identity is attempting to commit fraud. So here you'll see that third-party identity fraud peaked in Q4 2023, while we did see first-party fraud pretty much remaining consistent. Now, I'd say the overall decline in the fraud rates may suggest that some of the detection strategies are working. So our fraud teams are hard at work trying to combat fraud, and we are seeing this. However, there still are some indications that there's a shift in fraudsters' behaviors and where and how they are attacking. Now, here we can take a look at the fraud rates across different demographics and geographies. And so you'll see on the chart on the left, the fraud rate across age groups. You'll see first-party fraud, and may not be a surprise to many of you, is highest amongst younger consumers, those 25 to 45. And we see older consumers, 56 plus, tend to be targets for identity theft. Now, the chart on the right highlights how the fraud rate varies across provinces in Canada. And you'll see the first-party fraud rate highest out in Alberta and the prairies, a trend we've been seeing more of. And if we look at third-party rates, they're somewhat more spread out, but highest in Ontario, BC, and Quebec. Now, when we look at the overall portion of identity fraud, it has decreased. We're seeing synthetic identity fraud more than double, though, in the last 2 years, and certainly a concern and a trend to watch. We do know that synthetic identity fraud can be very difficult to detect, and it really just involves fraudsters creating a totally new fabricated identity by either combining a combination of real and fake information. So as an example, a fraudster may use a real SIN number, but they'll combine it with a fake name, a fake address, as well as fake date of birth. Now, if we look at the increase in first-party fraud, we do see it has been significant. And a few of the factors that we're seeing kind of rolling up from a first-party fraud perspective, you'll see in the chart on the right. And their primary fraud reasons are around account abuse, which essentially is borrowers misusing their account or engaging in activity that's contrary to the agreements they have in place. Or we see conflicting information, very common. There are discrepancies in the information that clients are providing on their applications, which is a sign of intentional misrepresentation. So again, signs of potential first-party fraud, but again, third-party fraud if the information is being changed by the fraudsters. Now, we also are seeing falsified documents. And when I look at the falsified documents and the trends that we're seeing there, we're seeing quite a bit in falsified down payment documents, account statements, and income discrepancies. Again, trends we talk about when we look at different fraud trends in the mortgage industry. This is something that has come up quite a bit, as well as in other areas of fraud. So again, falsified documents, a concern. We also saw usage and hardware fraud. Now, this is specific to the telco industry, but this is where we have seen worthless deposits and really payment fraud becoming a big challenge. Okay, let's take a look at the key differences between true identity fraud and synthetic identity fraud. Now, true identity fraud is more the traditional identity theft that we talk about. And it really involves stealing or identity. We'll see it's a little more complex because the fraudster is trying to create an identity and build up credit history with the intent of applying for various loans, credit cards that they eventually will default on. Now, some interesting insights. We do see younger consumers are more likely to be targeted for their data in synthetic identity fraud, possibly due to their presence online and the personal information that they have available. Makes them more targets, if you will. Now, we also know that synthetic identity fraud is most common in unsecured lending, like credit cards. That said, as we've watched the rise, we are seeing an interesting trend where it is becoming more evident in secured lending. Now, looking at credit scores, 61% of victims of true identity fraud have a credit score of over 700. While for fictitious identity fraud, we saw 35.6% had this score. So again, implies fraudsters are often targeting individuals with well-established credit history. Whereas with synthetic identities, we're going to see lower scores because it's newer. They're trying to build that credit history. It takes time. Time that we know fraudsters now are willing to wait, as we've seen synthetic identities on books, potentially on your books, for years at a time, trying to look and pretend as if they are good clients. So now to the right, you'll see how true name fraud and synthetic identity fraud vary against age groups. So you'll see synthetic is highest amongst 26 to 35 age band. And when we look at true name fraud, we can see that it's highest amongst 46 to 55 year age band. I think it's really important that we understand these patterns and trends. It helps lenders and businesses understand what demographics are most vulnerable to what type of fraud, so you can actively prevent and detect it early and move and shift with the change as you're seeing them. So now I'd like to pivot a little bit and get some insight from Julie, just to really discuss an update on how consumers are feeling about fraud. Julie, over to you. Just a moment. I'm going to pass that over to Julie.
Cher, I think Julie is just having some microphone problems at the moment.
Okay, apologies everyone. We're just going to pause for a moment. Okay. While Julie is getting set up, I think we've had some connectivity issues. I'm going to proceed with the trends and we can come back to Julie to give us sort of a view on the consumers and how they're feeling about fraud.
Let me just check now, Cheryl. Do you hear me?
Oh, I hear you.
Well, sorry about that poor timing for a massive freeze on my computer. I'm torn between speaking fast before it might happen again or slowly in case it's chopping a bit. As many of you repeat webinar attendees will remember, at Equifax, we've run an annual survey to capture the evolving consumer sentiment around fraud. This year, it was a demographically representative sample, as it always is, of 1,590 Canadians conducted by Leger in early February, so just last month. We found that there is a slight dip in the overall perceived vulnerability to fraud amongst the survey respondents, but those who are concerned are generally quite concerned. So starting at the top, you can see that 3/4 of the respondents indicated that they feel vulnerable to fraud online. That is down slightly from 80% last year and a peak of 85% back in 2023, but still a sizable majority of consumers. And the top concerns around vulnerability online continue to be things like computer viruses, data breaches, online purchases or payments, and phishing type of scams. Moving clockwise to the on-the-go category, so consumers concerned about being victims of fraud while they're out and about, perhaps shopping, we do see a drop from 53% in both 2023 and 2024 to 41% for 2025. The respondents are continuing to identify their top concerns in this category as the use of public Wi-Fi, the possibility of stolen wallet or purse, and the use of bank machines. Turning to the at-home category, we also see a slight drop here from 34% last year to 31% in 2025. The main concerns here are around phone scams, theft of physical mail, dumpster diving, although the paper-related concerns have decreased to 10% and 8% amongst the respondents. Swinging over to the left side in orange, 23% of the respondents indicated feeling vulnerable when they're in stores, which is also down from the last couple of years, but it's more in line with the numbers we were seeing around 2021, with 24% of respondents being concerned about this type of fraud. The activities that people are worried about are related to credit card payments, as well as completing application forms in stores containing their personal information. Under those orange folks, we've got that confident 7% reporting that they never feel vulnerable to fraud. Last year, we saw 6% of respondents agreeing with that statement, but there was a high level of confidence in early 2020 where it was a little more, getting on for 10% of respondents saying that they never feel vulnerable. So we know that people are thinking about these things and worrying about them. At the very bottom here, I don't want to leave out the people who said they don't know or prefer not to answer. We all know that that's an option in these type of survey responses. And this cohort has increased slightly from 4% last year, which may be an indication that a lot of people are uncertain around what they should even be worried about when it comes to fraud. We introduced a new angle on this year's survey. We wanted to capture whether people tend to feel more confident in themselves and their own ability to avoid fraudulent or scam type situations, or if they were confident in their family members' abilities to do that. I have to admit, I found these results really surprising. I was expecting that people would be feeling more confident themselves, that, well, I know how to spot a scam, but it's my elderly parents or my children who are just starting to use internet or banking services more broadly. So I was really surprised to see that people tend to be more worried about themselves than family members. I'm not sure what this means for us as a species and a society, but that's probably a topic for a different webinar, perhaps given by a different organization. So starting on the left in orange here, the identity theft example that was given was somebody stealing your personal information in order to open accounts or get loans in your name. More than half of the respondents are concerned about this for themselves, but only a little more than 1 in 3 are worried about their family experiencing that. In the middle, we've got phishing. That, of course, is described as getting tricked into giving personal information through fake emails, phone calls, or websites that look real, like your bank or another organization you do business with. The younger age groups here are the only ones that show more concern for family than for themselves. Almost half of the respondents are concerned about themselves, but only 40% concerned about their families. And this is actually the question reflecting the strongest concern for family members relative to self in the respondent's perspective. And you'll notice in the lowest age ranges between 18 and 44, these are the only ones that any of these questions where we see there is slightly more concern for family members than for the individual themselves. And finally, on the right with digital payments, this was described for the respondents as being tricked into sending money to the wrong account or the wrong person. And we saw a little over a third of the respondents concerned about digital payment fraud for themselves, but only a quarter worried about this type of fraud for their family members. So on that note, I'm going to turn it back over to you, Sherol, to talk about industry fraud trends.
Perfect. Thank you, Julie. You know, listening to consumers' concerns with identity theft and scams, and we know, that's changing and we're seeing it more and more often in the media. I want to dive into that a little bit more. And so, Jeff, I'd like to ask you to talk to us a little bit about identity theft and the disguises that fraudsters use in these various types of fraud.
Yeah, thanks, Sherol. It's a great question. I'm going to start off by mentioning or by highlighting the fact that we at the Canadian Anti-Fraud Centre document over 30 types of fraud, from investment scams to romance and relationship fraud, spear phishing, phishing, job scams, to name a few. And what we're seeing in every type of fraud, there's identity theft is very common. So for example, a job scam, where the victim may think they're getting an employment opportunity, fill out a contract at the beginning, and they provide personal information. They may forget that happened, and because they focus on the fact that they lost money throughout the scam, but they were also a victim of identity theft. So that's one example. Overall, the CFC reporting indicates that there is ID theft in over 25% of our reports received. So for anybody that's not aware, ID theft happens primarily over the phone. You get a phone call. It could be an extortion phone call claiming that there's a problem with your social insurance number, and they ask you for that social insurance number again, and you lost money in that scam, and you forget you provided your personal information. So another example of that, and that's where fraudsters have the ability to create synthetic IDs, like Sherol touched on a little earlier, with the information that they collect. So based on reporting in 2024, over 30% of ID theft occurred over the phone. So telephone scams are still very prominent. Based on our reporting, still the top solicitation method that fraudsters are using based on number of reports received. 22% by email, 18% was online, 3.1% via text message, and 10% from data breaches. So again, this is only a small sample of what's actually out there. We estimate that we only receive about 5 to 10% of reports at the Canadian Anti-Fraud Centre. But in a nutshell, that's what we're seeing. And out here to raise awareness to bring those numbers down.
Thank you, Jeff. And, we know fraudsters are constantly changing their methods. Can you talk to us a little bit about maybe some of the latest tools or tactics that they're using in these frauds?
Yeah, so another great question. So I'm going to start off by highlighting the fact that data from Stats Canada shows that the use of the internet for individuals and businesses has increased from 68% in 2006 to 95.6% in 2022. So it goes without saying that most Canadians are spending some time online. And even going back to 2020 where the pandemic came into play and Canadians changed their habits, whether it was more online banking or just generally spending more time online trying to meet people or whatever the case may be. The increase in internet use and the evolution of technology at the end of the day has created a higher risk fraud related environment for Canadians, making it easier for criminals to target Canadians who may be new in the cyber environment. They might be less tech savvy, or businesses that may not have adequate cyber protection or procedures in place may be more at risk as well. Fraudsters are increasingly using artificial intelligence, or AI, and related technologies to perpetrate various forms of fraud. Some ways in which AI is being used by fraudsters, as observed by the Canadian Anti-Fraud Centre, aside from, I think, when we mention AI, automatically in fraud, we're thinking of deepfake videos. There's more to AI than that from what we're seeing. It could be phishing and social engineering, where AI can be used to personalize phishing emails and messages by analyzing data from social media or other sources online, making them more convincing and difficult to detect by traditional spam filters. So that's one example. Another example is maybe a fraudulent account creation. AI algorithms can be used to automate the creation of fake online accounts for various purposes, such as conducting fraud or engaging in identity crimes. AI can be used for data analysis. So it can analyze large data sets to identify potential targets for fraud, such as individuals with specific demographics, or even on the business side, where it can be used to collect data before going in for a spear phishing attack. And of course, like I mentioned, deepfake technology, while not strictly AI, deepfake technology, which uses machine learning algorithms to create realistic fake videos or audio recordings. So in summary, fraud has evolved significantly over the last few years, driven by technological advancements, globalization, and changing criminal tactics. At the end of the day, to effectively combat fraud in this evolving landscape, we must all continue to adapt our strategies and collaborate with our networks to stay ahead of fraudsters' tactics.
Thank you, Jeff. I certainly agree, and I think that's part of why we definitely want to be front and center in keeping the industry informed about fraud trends and the various changes and emerging technologies and that fraudsters are using and deploying. So thank you for that. So now let's dive into the trends in a little bit more detail by industry. Given thought to what Jeff just shared with us, let's see how it's impacting specific industries. Okay, we're going to kick things off with mortgages. So the mortgage market is showing some signs of recovery. The increase in new originations that we saw in Q4 was at 39% compared to the previous year's low. Now, the fact that 50% of these new originations were renewals or refinancing indicates that the market is active with existing homeowners rather than new buyers entering the market. Now we see lower interest rates. They've certainly provided some relief for first-time home buyers, making mortgages more affordable. However, with mortgage renewals being expensive, particularly for those who secured historically low rate, those individuals are going to be going through renewals this year and into next year, and they're going to be facing significant increases that are going to impact their monthly payments and likely put a strain on their finances. Now, we also saw some high delinquency rates in Ontario and BC, a concern that's likely due to a combination of how high housing prices, as well as the overall economic pressures that we've all been feeling. So I do think here, ongoing economic uncertainty and affordability challenges are going to have an impact on recovery. So even though new mortgage originations are increasing and we are seeing the interest rate drop, the number of applications are also up at 35.8% across Canada. Now, the mortgage fraud rate has remained relatively low, with fraud applications significantly down by 37.6%. Now, we have been seeing elevated rates of fraud, particularly out west in Alberta, which we've discussed before, followed by Ontario and Quebec in Q4. Now, when we look at some of the reasons behind mortgage fraud, we see that falsified financials and income information is an ongoing major concern in mortgage application fraud. It really accounts for over 95% of fraudulent applications. Now, documents that are commonly falsified include pay stubs, employment letters, not a surprise there, account statements, and down payment information. I have to always call out gift letters and tax slips. Now, when we look at consumers with no existing mortgage or essentially first-time home buyers, they seem to have a significantly higher fraud rate when we compare to existing mortgage holders. So that rate is 0.31% compared to existing mortgage holders at 0.19%. And this was, again, findings in Q4 2024, something we'll continue to watch. I think this is, again, reinforces our message that lenders need to focus attention on verifying financial documents. Now, auto, always interesting. So the auto market has been strong with high demand, but we are seeing some concerns with overextension now, and this is especially due to what we've seen in higher prices in auto. So the new loan origination surged in Q4. They were up 12.5% year over year. However, we are seeing that auto loans that have been open in the last 2 years are continuing to show some risk, especially for used cars. So this is where we are seeing the overextension of consumers having an impact. So while auto captives and non-bank auto loan delinquencies are starting to stabilize, missed payments on bank loans for new and used cars is continuing to climb. Okay, so let's look at the breakdown of the types of fraud that we've seen, as well as some of the demographics involved. So when we look at auto application fraud, falsified documents and income are significantly up at 12.1%. And we definitely are seeing signs of first-party fraud increasing. Now, that said, approximately 20.3% of auto fraud has been identified as third-party fraud. And this is similar to what we've been seeing in the previous quarters. Now, true identity fraud remains a larger portion of auto application fraud and is a continued concern. Again, you'll recall I touched on seeing a lot of the fraud around secured lending and unsecured lending, and we're starting to see some changes in identity theft in secured lending. Now, if we look at younger consumers, age 26 to 35, they make up a majority of the auto fraud for both first party and third party fraud. So again, something to take a look at, and certainly as you're refining your strategies, there's some interesting trends here that can help you dive into what could be plaguing your books, potentially causing more fraud and harm down the road. Now, we've also taken a look at the new to credit, new to Canada consumers, and we've actually seen that they've had higher auto fraud rates as well. Looking at our numbers in Q4 2024, we saw 0.51% compared to 0.22% for existing consumers. So some interesting trends here in auto. Now, looking ahead and considering some of the key drivers, what do we think we're seeing and what should lenders be doing? Well, the falling interest rates, they may help to stimulate growth in the mortgage market. However, we do know that borrowers who are looking to renew now may be faced with some challenges as their payments could be higher at renewal. We're also seeing some changes in regulations related to the auto industry, and that's going to be a priority certainly over the next month. And this industry is also battling ongoing fraud risks. So it's going to be something to really focus on over the next few months. Now, tariffs, that can also have an impact on auto sales and just really affordability challenges. So a lot of uncertainty there. And we have been seeing, again, an increase in identity fraud around auto and the risks around auto loan stacking. So concerns in this market definitely need to be watching out for those trends. Now, when we look at first-party fraud, that is a significant issue. And so the economic pressures, the continued uncertainty, potential tariffs, that may drive more individuals to commit first-party fraud, really to secure funding, loans that they might not otherwise be able to get. So what should you be thinking about as lenders? Well, for your higher risk segments and geographies, making sure that you're conducting some enhanced due diligence by verifying borrower information, particularly financial documents, income, and employment. Making sure that you're reviewing the applicant's credit history and their overall health by looking for signs of stress or is there any inconsistency. Those are red flags that in combination together tell you you may need to monitor and do more. You also want to be thinking about a real-time fraud detection solution with prevention capabilities that's really going to leverage comprehensive data to help you understand and find the trends and anomalies. I would say that lenders are going to need to really be proactive as we're watching these fraud risks evolve. So moving on, let's talk about credit cards. Had a lot of questions around credit card fraud, so I'm hoping you get some insights here. Now, we do see the credit card market has been cooling off with a decrease in new credit card account originations by 10.3% year over year and down by 9.5% quarter over quarter. Now, this may be due to multiple factors. Lenders may be becoming a little more cautious in extending credit. Could be the challenges with the economy affecting borrower behavior. Now, we also see that high immigration volume, which did contribute to the growth in the cards market, has reached a plateau. So that's certainly having an impact. Now, there's also a generational divide in how consumers use credit cards. We do see that younger consumers are more vulnerable to debt accumulation from credit cards. Don't think that's quite a surprise. But again, all of these could have different implications for lenders when you're looking at your business and risk strategies. So things to think about. Now, looking ahead at the overall credit card landscape, we do see there has been an uptick in fraud, but it hasn't been as severe as the attacks that we saw, I think, from the previous years. The rates remain below the levels we saw back in 2023. So a possible indication that patterns of fraud have shifted. So something we'll certainly need to monitor, and I encourage you to do as well. Now, if we look at the chart for credit card fraud by province, you'll see Ontario and Quebec, who have traditionally been at the top, they are now seeing more of, out west, we're seeing more of the fraud. So with BC and Alberta there now leading the charge. Now, when we look at credit cards, identity fraud remains a concern, particularly true name fraud, which accounts for 78.6% of fraudulent applications. And this is likely due to the various schemes that we heard Jeff talk about and describe. Now, a majority of the first-party fraud is conducted by consumers aged 26 to 35 with credit scores of around 650 to 749. And this is a consistent theme that we have been seeing as we've been tracking these trends. Now, also seeing some similar geographical patterns. Now, we found that Quebec, Ontario, and Alberta, and BC as well, have experienced significant levels of identity fraud. We also found that 17.1% of synthetic identity frauds were from credit cards. So again, just giving thought to these trends that we're looking at, lenders are going to need to give thought to strengthening their verification processes and making sure they're including real-time detection. But I'd also say ongoing monitoring for suspicious activity of both financial and non-financial transactions is critical to really understand maybe the patterns, the trends, and any sort of warning signs that are an indication that fraud is prevalent. Okay, on to banking. So digital banking has really become the primary way most Canadians are managing their finances. And I think Jeff quoted Stats Canada that we definitely are seeing a lot more digital transactions now with consumers. And we are seeing sort of more of a move to not just online, but now the enhancement of mobile apps is starting to grow. So we do see 77% of Canadians using digital channels for most of their transactions, as we see more adoption growing and the use of e-transfers and online payments becoming stronger. So really, we are going to have to continue to look at some of the challenges around digital banking to make sure that we're protecting consumers from some of the fraud schemes that Jeff discussed. So diving into banking fraud, we have seen that the fraud rates decreased from where we were seeing a peak in Q4 2023, sort of that year-over-year view. But they've risen again, but more to the levels we saw in 2022. So this is, again, going to be an area where I would say we need to do some monitoring and focus. We did see about 58.7% year-over-year increase in deposit fraud for small businesses. Now, this is not always a primary area of focus for fraud detection. In some areas, there tends to be more of a focus on maybe retail banking. So I think this is an area that definitely needs to be focused on. And as we are seeing fraudsters targeting small business account opening for larger payouts that they're able to get, and usually there's less, there may be some less controls around the whole account opening process in terms of validating exactly what is required from the business. And so this may be an area that you'll want to take a closer look at. You can also see here that Alberta and the Prairies have the highest fraud rate. So moving along, we can see that in banking overall, there has been a slowdown in the targeted fraud attacks. And this has led to a significant decline of over 40% in identity fraud, particularly true name fraud, which peaked in 2023. So here you can see conflicting information. There's big increase there, 21%, and we're also seeing a 10% increase in payment fraud. Again, indications of growing first-party fraud, although there was a slight increase of 2% in synthetic identity fraud. Now, just some interesting facts here. 66% of fraud applications were from consumers 45 years of age, and over 55% were made by consumers with credit scores under 700. We've also seen that there have been, a lot of media cases kind of talking about some of the frauds that we're seeing. And I'm reminded of the couple that I believe it was in February, we did see who were arrested for defrauding Canadians out of millions of dollars. And they were using spoofing technology. So again, some of the tactics that Jeff talked about really having an impact here. Okay, I'm going to touch on telco now and just doing a quick time check because we do have a lot to cover. I'm going to go through it a little quickly, so bear with me. So growth in telco is becoming more reliant on new to credit consumers. So there's been a 24.4% decline in new telco originations. And we do think some of the contributing factors could be reduced immigration. We're seeing fewer consumers with new credit files. And so that may be having an impact as well. Now, we do see telco fraud rates are rising. There's an increase of 18.8% year over year from Q4 2024. And we're seeing the application volume is down significantly year over year across all provinces, which is the opposite case for the fraud rate. So just going to pause for a second. Telco's been doing some interesting things, and I know you touched on some of what the fraud's tactics are with fraudsters leveraging, spoofing, and that tends to be more common. Jeff, can you maybe just tell us a little bit about what you're seeing in the telco industry?
Yeah, sure. I'll do this quickly. Cheryl, I think that, obviously identity fraud where applications for cell phones are still prominent based on our reporting. With that being said, I think it's important to highlight that we're getting a lot of reports, and we have been for a couple of years, of fraudsters impersonating telcos. So it starts off as a phone call, pretending to be my cell phone service provider. They'll say, "Hey, Jeff, I have this awesome plan to offer you for $30 a month with a brand new iPhone. All I have to do is verify your credit. So can you provide your driver's license information, your social insurance number?" And of course, me being vulnerable because I'm trying to save a bit of money, I provide the personal information. And from what we're seeing, the fraudsters actually go through and order cell phones with the victim's identity. And the victim may get the cell phone and ask to ship it elsewhere to an alternate alternate address. I thought it was important to mention that variation just because of the prominence of service fraud, number 2 on our list based on number of reports in 2024 and 2023. So yeah, that covers that variation. I think it's important that we mention this variation any chance we get, whether we're doing presentations or events. So
perfect, thank you. Okay, moving along. So just going to pause on this briefly, just highlighting a few telco trends. We have seen again decrease slightly from 21.7% in Q4 to 6.7%. And we're really just seeing a shift in overall tactics with fraudsters focusing more on payment fraud in this space. So just looking ahead, some of the key drivers and things that lenders should be considering. I'm going to more focus on the strategies. We do see, credit demand is going to have an impact, certainly the rise in synthetic identity fraud, as well as identity fraud. So what should you be thinking about as lenders? Well, deploying, again, real-time fraud detection solutions with strategies to prevent and detect fraud, not just at application stage. Fraud happens throughout the journey, client's journey. And so you need to make sure you're looking at risks through all stages, considering financial and non-financial transactions. You need to look at targeted strategies for high-risk segments and vulnerable consumers, as well as what could potentially be hiding in your collection books, and dare I say even your client portfolios. We've talked a lot about synthetic identity fraud. I challenge you to look at what might be sitting in your books today, looking like a real customer, but it is in fact a fraudster. Now, with that, I'm going to pass it over to Julie just to provide a little bit more of an update on our consumer sentiment from our consumer trends. Julie, over to you.
Wow, Cheryl, you deserve a glass of water, at least maybe something a little bit stronger. That's a lot of really detailed and helpful information. Thank you for that. Back to the consumer survey, we asked the respondents what would most help Canadians be safer from fraud. And on that specific question, the highest response was 61% saying that banks should implement stronger security measures to protect accounts. Now, to be fair to banks, this was the wording that was in the question. So consumers didn't have the choice to name any other industry. That sentiment that the organizations I do business with need to be implementing stronger security measures, I think that's an important one to take away. And you may have caught that I said 61% was the highest response, yet there are several numbers above that on this slide. Some of this data is coming in from other questions asked of the respondents, and they paint a pretty clear picture. Consumer expectations are high of both government entities and the organizations that they interact with. This one requires us to all take a deep breath, and even though we're getting short on time, I'm gonna take one too, because consumers seem to feel that they don't bear much responsibility when it comes to fraudulent activity involving banks. Now, again, this question was specifically worded asking consumers who they think bears the most responsibility between these three choices: the bank, the government, and the victim. So again, I think we'd be pretty safe to be thinking it's not only banks that consumers have this opinion of. So those of you who are in non-banking industries, please don't feel that now's a good time to wash your hands and like, oh good, well they're only worried about banks, so I guess we're good. I would guess that many of the respondents are thinking of a scenario where the victim didn't compromise their information in any way, such as sharing their PINs or their passwords. And I would like to think that that is related to why we see such a low number of people thinking that the victim might share some responsibility here. Shifting gears, we introduced some new survey questions this year around the connection between what many might consider everyday type of scams with more serious or organized criminal activity. And we saw some really interesting things. Almost 2/3 of the survey respondents made the connection between what may seem like everyday scams, like credit card or other banking scams, and more serious crimes like human trafficking or illegal weapons trade. A slightly higher number said they are more likely to take steps to protect themselves from scams if they have a better understanding of how these scams can be connected to more serious crimes. This identifies a potential education opportunity to help people connect the dots and take better steps for self-protection while realizing they're not just helping themselves, they're helping all of us in our societal construct, if you will. Now, these numbers were fairly stable across all the age groups, but we do see some interesting differences with the detailed questions that we have on this slide here. On the left, we see a very strong agreement that media should do more to raise public awareness about the potential connections between everyday scams and larger criminal enterprises. And I also want to say, I don't use the term everyday scams lightly, as if they don't matter or they don't affect the bottom line or they aren't harmful. They are all of those things. But it seems that some people are starting to realize it's not necessarily just some schmuck who is trying to take advantage of you. There might be a deeper connection to bigger crimes that are taking place here. In the middle panel, you can see that all the age groups are on board with the notion that stricter penalties for scammers could help reduce funding for more serious criminal activity. And then on the right, we see that potential knowledge gap where just over half of the youngest respondents believe that protecting themselves from scams also plays a role in preventing more serious organized crimes. While that level of agreement increases with age up to almost 90% of the 65 plus cohort. So we've come towards the end. I'm going to pass back over to you, Cheryl. I hope you got a sip of water, and let's take it home.
Thank you, Julie. And yes, I did get a sip of water, nothing stronger though. All right. Thank you, everyone. So just doing a quick time check. I do have some questions that have come through. However, we're not going to have time to be able to go through all of them. What I'm going to do is work with our teams to provide responses to the questions that have come out. We've received some in advance. We've been answering some through the chat. Where we haven't gotten to your question, I'm going to do my best to have a follow-up sent out. So please, if you do have questions, you can always reach out to me on LinkedIn or reach out to anyone on my team. We're happy to help. But I also want to share with you just a few things before you head out and wrap up. So one, please remember to fill out the survey. Let us know how we've done. I know it's always a challenge to get to the questions. We're doing our best, but we also want to make sure you are fully aware of the fraud insights that are impacting your business and Canadians on a whole. Now, also, please sign up. You'll see at the bottom, as Jordan mentioned at the beginning, at the bottom, you can do our survey, but you can also register for our business credit trends and insights. A lot of great information there from a business perspective, so please sign up. And I want to do a special thank you to Julie and to Jeff. I think it was a great conversation. I say we meet again and do this again for the audience because I've seen some great questions coming through. So there's clearly a lot of interest in fraud and where the patterns and trends are going. Thank you, Jeff. Thank you, Julie. It was a great discussion. And to all of you who joined us, I want to say, again, remember it's Fraud Prevention Month. All of you, please do your part in helping to make Canadians safe. Thank you.